How do you see the growth of life insurance so far in 2025?
So far in 2025, I'm very optimistic. So we had a very strong start in the first quarter, especially compared to last year, 24. The first quarter was pretty slow. And we have seen a huge uptake in the demand of insurance products, particularly in health insurance. So we have seen 34% growth over last year, which is, of course, fantastic for us. And yeah, some confidence for the outlook for the rest of the year that this will hopefully continue despite some economic uncertainties. But we also know when there are economic uncertainties, very often then the population would look for more secure havens and yeah, become more aware and consider more to protect their wealth and their personal interest. So I do stay cautiously optimistic for 2025 and the coming quarters.
What are the products with the highest demand so far in 2025?
In 25, we have seen a huge uptake in health insurance. So whereas last quarter in 24, we have seen around 6 to 7% contribution of health insurance. In this quarter, we have seen 41% contribution of health insurance. So it clearly tells you there is an increased awareness and people have overcome, let's say, the recent years where there was a bit of concern around health insurance given the high medical inflation and also increasing prices for health insurance.
We heard that traditional products have higher demand compared to unit-linked products. Do you see the same thing in Allianz?
Well, I do see it in the market. Clearly, after the introduction of PID, which regulates the unit-linked products in a different way and has more requirements to unit-linked sales. Yes, you have seen a strong trend where companies would shift towards traditional products. I personally would not say this is clearly a pure demand from a customer perspective. This is more a shift in the interest of the sales process itself, as it is more simplified in traditional products. Also, the application for the license as an intermediary is simpler for traditional products, whereas unit-linked has its own extra license and is seen as a more complex product. With that, you have seen choices in the market where I think there was particular steering towards more traditional product. For ourselves, I would see a very balanced mix, and we aim to continue having a balanced mix. We have seen last year around 50-50%, which I think is a healthy balance. Healthier than it used to be in the past. It was clearly overweight of unit-linked products. 90% of products were unit-linked, 10% traditional, which I don't think is the right mix. So a balanced mix between 50-50 is quite good, I would say, and we are looking forward to continue that. This year, in the first quarter, we have experienced around 65% in unit-linked products and 35% in traditional products. But that is also given the health insurance, particular, which was in the past very strongly linked to unit-linked products. And we therefore have seen also some of the conversions to new product solutions, and that gave us an extra lift on the health insurance side and the unit-linked side.
But in the industry perspective, do you see the trend will remain the same until the end 2025?
Until 2025, pretty much. So I would say insurance is always a very long-term business. And clearly, if you look at unit-linked on a short-term perspective, you would face a lot of challenges in the market. We are seeing very volatile markets these days. We are seeing equity for the last 3 years, in fact, has in absolute amounts not really moved. There was high volatility, but the absolute index is on par. So for investors who look at this short-term periods, then yes, there would be a trend questioning the viability of unit-linked or equity. However, if you look in the long term, it's very different pictures. And I always believe insurance is for the long term and not a 3 years investment product. So we are considering to cover our health, to cover our life. We are covering for pension in the future. So everything is many, many years or decades we are looking at. And if you look then at the returns of unit linked, consistently you would see a very stable return. But then what I see now is more, and what we would also recommend is a more balanced approach. So you would have seen in the recent years where you face high volatility, you would recommend clearly to go more balanced and mix equity with fixed income to ensure more steady returns. And here you would have seen over the last 5 years a very, very decent absolute return of 27%, and that is very comparable to short-term time deposits, I would say, even outperforming in several years.
Our president wants insurance companies to help with economic growth. How do you see opportunities and also challenges with this statement?
Well, first of all, I very much welcome the vision and the request that the insurance industry is supposed to contribute to the economy. I think we are a good contributor to the economy, and we can be a much better contributor to the economy very clearly. There's massive opportunity. I mean, Indonesia is seeing still a very relatively low insurance penetration in the context of Southeast Asia. But if you look at North Asia, for example, or even you look over to the Western markets, the penetration is much, much higher already. So the opportunity is massive. Now the question is why, despite the opportunity, it has never changed. And in my perspective, there is too much focus of the entire industry among the insurance products are seen as luxury. So naturally, it is catered towards the more affluent segment. Whereas the truth is, the insurance should cover the middle class and the upcoming middle class. Those who are really in need of insurance, those who just accumulated wealth and need to protect their wealth, as well as their health, of course, which in case of illnesses could have an impact again on their income and their financial security. So the opportunities are there. Now the question is, why can't we really access that, and why do we not get there? And why is insurance not top of mind, for example, in the upcoming middle class? And here, clearly, you see a behavior where there is prioritized. If there's excess spending possible, then typically it will be for consumption, travel. But the least thought is about protecting what I have accumulated already. So maybe the challenge is that there is simply not enough stimulus given to those segments to really consider insurance as a solution. So I would say the government has done tremendous efforts to improve financial literacy, inclusion. And if you look at the statistics, obviously very good progress has been made over the recent years. But then in fact, if you look at the absolute amount of the market and penetration has not changed too much. So we have seen in other markets, for example, stimulus like introduction of mandatory insurance for the basic needs, for example, that would give a clear lift to the insurance industry and the awareness of the need of insurance. Secondly, I think tax breaks typically were considered to stimulate the acquisition of protection to especially the middle class, who is more price conscious. So having beyond the DPLK fund, for example, certain tax advantages, tax deductibility of premiums for health insurance, for example, or in non-life party liability, etc. This could definitely help bringing this on the road and hopefully contributing even more to the economy.